Hello and welcome to The Trade here on AusBiz. Before we get to the charts, let's have a quick look at what traders are watching. Russian President Putin agreeing to temporarily stop attacking Ukrainian energy facilities, but has declined to endorse a full 30-day ceasefire with Ukraine. Israeli airstrikes on Gaza killing more than 400 people, shattering nearly 2 months of relative calm since the ceasefire began. NVIDIA's CEO says the company is well placed to navigate a shift in the AI industry in which businesses are moving from training AI models to getting detailed answers from them. And Alphabet will buy fast-growing startup Wiz for about $32 billion in its biggest deal ever, as it doubles down on cybersecurity to sharpen its edge in the cloud computing race against Amazon.com and Microsoft. Let's get into all the charts now with Tony Sycamore from IG, who joins me. And Tony, let's kick it off with what the technicals are showing you with the NASDAQ.
Yes, sounds good, Julia. Well, we saw the NASDAQ's two-day bounce come to an end overnight, and a little bit of nerves there ahead of the FOMC meeting, and also some caution as Middle East and geopolitical tensions started to rise there. In terms of where the NASDAQ is, it's still below that broken uptrend line that you can see there, and that comes from the lows back at the end of 2022. Now, that will provide initial resistance for any bounces. And above that, you've got the 200-day moving average. I see any bounce as a short covering rally. I can see no good reason for US equity markets to turn around in the current environment and retest the highs. So at this point of time, we're looking for places where this bounce, should it develop further, stall before another test of the lows, which we saw just a week ago.
All right, well, let's look then at what we're seeing with our market. And when we spoke last week, we were talking about how it had breached through quite a few of these technical levels, and it's fallen through even more. I mean, sort of entering correction territory on Thursday before a bounce back.
Yeah, well, we saw a little bit of basing down there around 77.30 to 77.40. And yesterday we pushed up to a high around 79.20, but it wasn't convincing. And again, those rising geopolitical tensions in the Middle East hampered the market's rally as we saw there. It peeled off about 60 points into the close. And I'm of the mindset that, look, with a 10% pullback already on the table, that it's probably done for about now. But I don't see, as I mentioned, any good reason for equities in the US or here in Australia to just rebound and test those highs. So as I mentioned with the US equity market, I think bounces are probably going to be short squeezes, and we do have to be mindful that short squeezes in bear markets can be quite vicious. They can go further than everybody would expect. So there is some levels to keep in mind, but I guess the target for me on any short squeeze would be up around that 80.50 to 80.60 area.
All right, let's have a look then at some of the other technicals, and particularly what we're seeing in the Aussie dollar. I mean, there has been a little bit of weakness in the greenback on these recession concerns, but how long is that going to last in terms of supporting the Aussie?
Well, it's going to last as long as the tariff uncertainty and trade policy uncertainty overhangs the US dollar, as far as I'm concerned. And we've got quite an unusual situation. We've got equities trading lower in the US and the US dollar trading lower. And it doesn't always, in fact, that's quite a rare combination to see. And it has supported the Aussie dollar. And what you can see with the Aussie, it finally pushed above some downtrend resistance, coming in around 63.30. And to me, it looks like the Aussie's undertaking a correction back up towards that orange line, which is a 200-day moving average. That gets us up to around 65.25 to 65.35. And at that point, I'd probably be looking for signs of exhaustion, that potentially maybe the US dollar has found a short-term low and the Aussie's rally has run its course for now. But at this point in time, I think you've got to allow the Aussie more opportunity to get up towards that 65-cent area before we start to confirm whether it has been a correction or the start of a more significant rally.
Well, the one thing that is rallying significantly is gold, Tony. I mean, breaching 3,000 late last week and again yesterday, and now there's calls for potentially 3,500. What are the technicals showing us?
Well, the technicals are, I think, setting up for a very interesting night. It has rallied up towards this bullish trend channel, which comes in around 30.45 to 30.50-ish. I think with the significance of this trend channel in that it has held both dips and capped resistance or capped rallies in the past, I wouldn't be surprised to see another turn lower from the top of this trend line resistance coming in, as I mentioned, around 30.50. I'd only be looking for a $50 pullback, but it's something which I am watching for. It has got up towards the top of where it has failed from in the past, so certainly something to be mindful of. In the bigger picture, however, I don't disagree that we've got higher levels coming, but short term, potentially at a level there where it might start to find some resistance.
All right, and let's have a look as well at the digital gold, Bitcoin. What are we seeing there?
Bitcoin, well, it's had a nice bounce from that 76,000 low, which we saw last Tuesday, but it has been unable to push on above the 200-day moving average. Again, that orange line comes in around 84,000. If Bitcoin can get above 84,000 on a sustained basis, if it can get above that trend channel resistance and the old high from earlier this month around 95,000, so 92,000 to 95,000, I think that would probably be a significant move for Bitcoin and confirm that the correction from that 109,000 high is complete. But we're not there yet. So until we start to see that those two levels break, then I think you've got to allow for this correction to play out in the short term.
All right, Tony, thank you so much. Tony Sycamore there from IG. We're going to take a short break. That does it for this edition of The Trade. Be sure to join us next time.